Hey, Joe Brunsman here, back with another video for you. Today, we're going to be talking about the top 10 problems that cyber insurance will not and cannot solve for you. The reason I'm making this video is I'm seeing this disturbing trend where businesses are essentially overly reliant on their cyber insurance policy, and they're not taking their cyber security and those resultant controls seriously enough. So today, we're going to be talking about those things that will not and cannot be solved by cyber insurance. All right, to begin with, someone's going to say, well, my cyber insurance guy said something different, or my general insurance guy said something different. So I'm not trying to toot my own horn here, but just to give you a little bit about my background, I do have a master's in cybersecurity law. I have a bachelor's in systems engineering / robotics from the United States Naval Academy. I'm a former IT. I've written 2 best-selling books on cyber insurance and cybersecurity law. I've written cybersecurity, compliance, and insurance courses for multinational trade groups, numerous peer-reviewed articles in nationwide magazines, about almost a dozen of those by now. I've spoken nationwide on these topics to various large groups. I've sold and consulted on literally hundreds of cyber insurance policies. So I'm not just some random guy on the internet telling you this. I do have a very deep background in this material. So first of all, number one, fines and penalties are insurable where allowed. So first of all, the reason that they may not be allowed is because it could be against public policy. Those fines and penalties are generally supposed to be this punitive action against the business or the business owners because you did something wrong and the state says you should be punished for this. Sometimes we don't know if the state would allow or not allow insurance to actually cover those fines and penalties. Either there's no case law on it because it just hasn't been litigated yet, no one's actually fought it, or that penalty just hasn't been brought yet. So we just have no idea on if some of these fines and penalties are actually insurable or not. I wouldn't recommend that you try and test that case. Further, you're likely subject to multiple state laws. The breach notification laws that you're subject to, it's not where you're a resident of, it's not where your business resides, it's where your clients are residents of. So, how large are those penalties and all of these various state laws that you could be falling under, as well as, potentially federal level laws as well? It depends. It could be per occurrence. Some different states, they've got different levels of penalties based upon if they think that you were willfully negligent in your ability or lack thereof to secure that confidential information. So you could be facing some very, very large penalties that, we just don't know what the limit on those is yet. So I wouldn't recommend you test that. And then finally, you don't want that type of publicity. So let's say it even is insurable and you get away scot-free and you're lucky. Well, what do you think is going to show up when someone searches for your business address? Probably that you got fined some huge amount of money by a state, and that is very bad publicity. This here is just a little clause I pulled out of an insurance policy, and the requisite point, just to prove, is you'll see right there underlined in red, penalties mean any monetary amounts imposed in a regulatory proceeding to the extent insurable under the law. So it's even hard baked into your policy where it says, yeah, you have this coverage to the extent under the law, right? Where allowable. So please don't test that. Number 2, ongoing compliance costs aren't insurable. So once again, here, pulling back that same clause a little bit further down, penalties will not mean cost to comply with injunctive relief, cost to establish or improve security or privacy practices, or audit, reporting, or compliance costs. Now you may be thinking, what are they really getting at there? What could that mean to me? Well, here's an example. This is a recent FTC consent order. This is 11 pages long. Obviously, you don't want to read it. I'm just trying to show you it's quite lengthy. Highlighted there in yellow are actually all the new additional things this business has to do. So let me just kind of pour down the list for you. So in essence, they need to create a written information security plan. They're essentially going to have to create the position of a chief information security officer if they don't already have one. They're going to be doing risk assessments, document retention and destruction, code reviews, penetration testing, input validations, network segmentation, IPDS implementation, file integrity monitoring tools, data loss prevention tools, location upload restrictions, obviously encryption of PII, vulnerability testing, service provider selection, yearly certifications to the FTC, compliance reports, accounting record issues. And oh, by the way, some of these are, biannually, So it could be, every 2 years they have to do this. Some of these are yearly requirements. Some of these are ongoing requirements. There's a number of, other record retention issues and other compliance issues involved with this. Most of these also include some form of, hey, you have to do cybersecurity awareness employee training there. And oh, by the way, these consent orders last for 20 years. Can you imagine the cost of all of that stuff for 20 years? And by the way, as technology improves and changes, built into these consent orders is you have to improve your system. So a lot of these are, it'll have a clause where it says such as, but not limited to. So it's saying, hey, at a minimum, you have to do these things. And yes, the FTC will come back after you if they think that you're not taking this, in a reasonable fashion, if you're not complying with their orders, or if they think, hey, something new has come out that you should be doing that you're not, they're going to hammer you. So you don't want to get caught for, having to pay for all of this stuff under the boot of the government for the next 20 years. All right, other post-breach costs could be uninsurable. So here's an example. This is the definition of damages. I'd recommend if you want to read all this, just pause the video here and just scan through it. But some of the highlights here, damages will not include future profits, restitution, disgorgement of unjust enrichment, return or offset of fees, charges or commissions, charged or owed to an insured, taxes or loss of benefits, fine, sanctions, penalties, punitive or exemplary damages, or any damages which are multiple of compensatory damages, liquidated damages, fine, costs, or other amounts under a merchant services agreement, any amounts for which the insured is not liable or for which there's no legal recourse against the insured. So you can see here, there's actually quite a lot of things that, even in this insurance policy, it's saying, hey, this doesn't count, right? We're not insuring for these things. All right, number 4, you could be doing long-term damage to your brand identity. And here's just a quick example. This took me all of about 30 seconds to find. And it says 1 in 4 Americans won't do business with data breach companies. Now, why is that? Well, obviously, hey, this is personal information. They've probably known somebody or they've heard the horror stories of somebody that had to go through identity theft, try and put their life back together, try and, restore their credit score. It's just a nightmare for most people. So for a lot of folks now, they're saying, hey, I looked this company up online and I saw here that, they got breached. Why take that risk when I could just go to another company that offers, let's say, identical or similar services that hasn't been breached? It's just one less thing that you want to have to worry about. And it's just one extra barrier you're going to have to actually pulling in future customers. Now, we all know how hard it is to bring in new customers, and it's an expensive and time-consuming process. Don't put another barrier in your way. Next, number 5, you're probably going to drive happy customers away. Now, before I wrote my books, I was under the impression of something called breach fatigue, where, hey, we've all been breached before, so it's not a big deal anymore. Customers don't really care. Not true whatsoever. So I actually went back. So for 2014 to 2019 by industry, this is from the Ponemon Institute studies. And you can see here, I'd recommend you pause the video to find your own particular vertical there. You can see where there's pretty much an upswing for the last couple of years of clients increasingly leaving following a breach. So, hey, don't lose your current customers. Yes, there is potential coverage if you have the right insurance policy for reputational harm, but that's for a limited time frame. That's not going to be forever. And hey, some of these customers, maybe you would have had them for the next 20 years. Well, suddenly that reputational harm endorsement for, 6 months or a year of coverage, whatever that delta is between what you used to make and what you make now, it's nice to have that pillow there, that extra little cushion for you, but you don't want to rely on that. It'd be much easier to just not have that breach in the first place. All right, next, number 6, you're going to miss out on contracts. And why is that? Well, first of all, here's an example from the FTC, kind of the nation's data security enforcement arm. And they're saying, make sure your service providers implement reasonable security measures. So the question is, well, why is that? I mean, besides the fact that, hey, it's just the law, here's an example from New York. Now, this is just New York's example. Every other state and territory, as far as I'm aware, has the exact same provision. And essentially this says, hey, if someone is holding data, right, they're a vendor, and that information gets breached, they're just a data holder. They're not a data owner. So if you're the data owner, you're paying for these costs. So not only are companies starting to figure out, hey, we're legally responsible for what our vendors are doing, and if they don't have the right security, we could have fines and penalties for that. But if our vendors get breached and it's our client's information, we're paying for that cost too, because there's really zero legal liability built into these breach notification laws. So don't make yourself, like a pariah when it comes to, any RFPs or any potential contracts out there, because I deal with these, RFPs and contracts all the day. My clients continually send these to me all the time. I'm now seeing you have to have reasonable cybersecurity. Sometimes they're actually going to say, we want a latest audit of your cybersecurity controls. And they're definitely going to say you have to have cyber insurance. So don't miss out on that. All right, number 7, don't test your policy limits. What do I mean by that? Well, first of all, you don't want to pay for a breach that you could have just avoided with a little bit of forethought and a little bit of additional funding. Next, when you have that breach, that's going to lower your available limits for the rest of your policy period, which makes sense. Now, could you have multiple breaches in a year? Absolutely. What's the probability of that? I have no idea. It depends on 1,000 factors. I don't think anybody could really tell you what's your probability of facing multiple breaches in a year. But if you do face multiple breaches, well, you don't know what that next breach is going to cost you. So the last thing you want to do is just rely on that cyber insurance policy. You have multiple breachers, or say one monster breach, and you don't have enough insurance there, and now you're paying out of pocket anyways. You want to avoid that type of thing. All right, number 8, you don't want to test the limits of your application. And what do I mean by that? Now, when you have a breach is not the time to figure out if you filled out that application correctly. So did you make a material misrepresentation? Did you make warranty statements? Are there warranty statements inside of your application or your policy? Did you overlook something? Did you have all the right parties involved when you actually fill that application out? A lot of people they don't think about these things before they fill out their application. It's, hey, one guy who's the insurance guy in the business, he's the one who fills this stuff out. Meanwhile, he's making representations on, say, behalf of HR or on behalf of IT, and it could turn out that that's just not correct. And hey, maybe that's how a cyber insurance company denies you coverage. And finally, has there been a material change? Did something change in the network and you just didn't report that as maybe required under your policy to your cyber insurer? And that's the thing that hinges on a declination of coverage for your cyber insurance. You don't want to take that risk, right? That's a bridge you don't want to cross unless it's the last bridge available to you. All right, number 9. Increasingly, I'm seeing this. For companies that hold large quantities of data, cyber insurers are actually just demanding certain controls. Or if you don't have those controls in place, they're going to charge you out the nose for that type of cyber insurance. So either now or later, you're probably going to be forced to pay for these things anyways. So you might as well just do it of your own accord, do without having to be rushed, right? To renew your cyber policy or purchase a cyber policy. Make sure you have reasonable and appropriate cybersecurity controls in place. And then finally, successive breaches could lead to uninsurability. So, eventually, to be quite frank, insurance companies are not in the business of paying out multiple large claims, right? Insurance companies are in the business of making money. Now, it's not to say that they're evil or just there's some, nefarious enterprise out there, but it is to say that an insurance company is like any other business where they're there to make money. They're not there to lose money. So if you keep having multiple successive breaches, let's say you have a breach a year for the next 3 years, hey, maybe you get away scot-free and there's no regulator coming after you and your clients aren't leaving and everything's hunky-dory and you still haven't taken care of that cybersecurity controls. Well, eventually the market is just going to say, hey, these guys have just cost everybody a ton of cash. And that's going to roll into something called your loss ratio. So what is your loss ratio? That's really what you paid in your premium divided by what the insurer has paid out for all these losses. When your loss ratio becomes too high, you effectively become uninsurable because, no underwriter is going to take the risk on you because they could be risking their jobs on you actually taking this stuff seriously. So you don't want to get to the point where you're uninsurable. Hey, maybe you can get lucky for a couple of years, but eventually that luck's going to run out and you're going to be in some trouble there. All right, how about some final thoughts here? Well, first of all, yes, I am a cyber insurance guy. I do sell cyber insurance to, companies of varying industries, of varying sizes all across the nation. Cyber insurance is a must in today's day and age, but it's the last in that defense in depth, right? That's when everything else has failed, when you have all those cybersecurity controls in place and something still happened. That's when it's time to use cyber insurance. It should not be the first thing on your list in terms of cybersecurity, right? As I said before, create that defense in depth, have reasonable cybersecurity, make sure you stay up to date on compliance. So, I would urge everybody out there to have, some sort of ongoing relationship with someone who is an expert in cybersecurity law and compliance to assist you. There are hundreds of new potential laws every single year across all the different states dealing with cybersecurity. I can almost guarantee you right now that you are subject to a litany of cybersecurity laws that you've never even heard of, that you don't know exist, that no one has ever even told you about. So make sure you stay up to date on that. But I have a bonus for you. The last thing you want to consider is, do you actually have the right coverage for that loss? And that may seem kind of strange, but there's a myriad of different ways that you could actually have a loss in the quote unquote cyber insurance world. So here's a couple examples. Do you have coverage for bricking, cryptojacking, employee extortion, voluntary shutdown, etc.? All of these things could cost you money in that cyber insurance world. You have to make sure that you actually have the right coverage for that. If you don't even have the right coverage to begin with, well, then obviously that cyber insurance is going to do no good for you if that's the particular risk that caused you a loss. If you want to know more about that, this is where you can download a free copy of my latest book, Damage Control, Cyber Insurance Compliance. With that, I hope you stay safe out there. Like, share, and subscribe. Share this with your friends. If you're in the cybersecurity InfoSec world, please share this around so that we can spread the word, so that all those companies out there are taking the appropriate measures and making the appropriate investment they actually need in their cybersecurity programs. And with that, stay safe.